Today is Monday, April the 8th, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Mark Soderberg, ADMIS Senior Ag Analyst, and Alan Bush, ADMIS Senior Financial Economist. Starting with the financials this morning, Alan, the interest rate futures are declining to new lows for the move. Why is this?
Well, it looks like the Federal Reserve may be even slower than previously anticipated to pivot to accommodation. So we do have futures lower across the board today. And after this weekend, we had Federal Reserve Governor Michelle Bowman indicating that more interest rate hikes could be on the table if progress on lowering inflation stalls or even reverses. So this is really very shocking comments from her. Especially after just several weeks ago, the Fed was talking about 3 rate cuts. So this very much had a negative impact on the interest rate futures markets today. Right now, it looks like there's only a 5% chance that the Fed will cut at the May 1st meeting. And it now looks like the June meeting may be off the table as well, with only a 48% chance that the Fed will cut rates at the June 12th meeting. Moving out to the July 31st meeting, there's a 69% chance that the Fed will cut then. So looks like we're likely to skip May and June, and looks like the next target date for a rate cut is at the July meeting.
We'll see what we get this year. Maybe one, maybe none.
That's correct. Absolutely. Could be one, could be none. It's definitely moving farther out.
And Alan, what's your near-term outlook for the stock index futures?
Well, the fundamentals still are mostly bullish. One fundamental that is not is the Fed outlook. As I just mentioned, Fed being likely slow to cut rates. But other fundamentals seem to be bullish. Also, the technicals seem to be supportive as well. So I think once we get past the inflation numbers this week, that would be the CPI and PPI numbers, I think we can see stock index futures trending higher again.
And Alan, why don't you give me the top 3 reports this week that are most potentially market moving?
Okay, well, first of all, Wednesday we'll have the March Consumer Price Index, guessed at up 0.3%. Thursday, the March Producer Price Index up 0.3% also. And then on Friday, the April Consumer Sentiment Index predicted to be 79. So of those numbers, it's the inflation numbers that will tend to carry the most weight.
Thanks, Alan. Turning to the grain markets, Mark, what are your expectations for Thursday's USDA WASDE report?
Well, for U.S. ending stocks, I see a mixed bag. I expect slightly higher ending stocks for both wheat and soybeans, lower stocks in corn. In corn, I look for ending stocks to fall 75 million bushels to just under 2.1 billion. This as a result of higher demand. I see both feed usage and usage for ethanol production to increase 50 million bushels, while exports I see falling about 25 million. My estimate is very much in line with the average trade guess. In soybeans, I see ending stocks increasing only 10 million bushels to 325 million. This as a result of exports dropping 25 million. However, partially offset by a 15 million bushel increase in crush. My estimate is slightly above the average trade guess. And in wheat, I see ending stocks increasing 35 million bushels to 708 million. This with reductions to both exports and feed usage. My estimate is near the top end of the range of estimates, with the average guess looking for about a 15 million bushel increase. And in South America, I see USDA reducing Brazil's crops, both corn and soybeans, by 2 million metric tons, while in Argentina, I expect no change to their corn estimate at 56 million. And in soybeans, I'm kind of an outlier here. I'm looking for a 2 million bushel increase to 52 million metric tons.
And Mark, speaking of the wheat market, we've seen a little boost since late last week. What's the story on the wheat market?
There's a few things that really jump out to me. First of all, we are very much oversold with prices pretty much hovering just above 3-year lows across all three classes. Speculative traders have a rather sizable short position, so there's not much weather premium in the market at this current price environment. Secondly, conditions across the U.S. Southern Plains are turning drier as they have missed out on some recent rainfall. High winds this past week, I think, is likely going to see a sizable 3 to 4% drop in crop ratings later today. And then finally, in Russia, there's just continued concern. The government is attempting to restrict grain shipments over quality concerns. So far, that's only really had a kind of a modest impact on their export prices, this being the world's largest exporter. But certainly it's something that's contributed to the recent uptick in prices and something that's going to be closely monitored moving forward.
Lastly, Mark, can you comment on sustainable aviation fuel and any updates in that marketplace?
Yeah, there was an announcement on Friday, as reported on the wire service. The Biden administration would be more restrictive than ethanol producers had expected, or at least had hoped for. Corn-based ethanol would not automatically qualify for sustainable aviation fuel tax credits. Only corn being produced utilizing sustainable growing techniques would qualify. Exactly how this is going to be monitored is not known, and the final decision from the EPA has now been kicked back until May.
Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.